Good evening everybody, welcome to another episode of the Top Cat Crypto Show. And today the question that everybody is asking is, when will we have a reversal? When will this mini bear market revert? And in order to show you what can be expected, I will give you a little bit of history of how previous bear trends have reverted. So we can take a lot of information from the past, and I will use three methods. I will use the moving averages, the 50 days and the 200 days, and then I will also show you what can we expect according to the Fibonacci retracement levels. And the closest case we have was in this bear trend that started on April 2023, which was very similar date to our 2024 mini bear market. Our mini bear market started around the halving, one month before the halving, so on March. The halving was on April 2024, so between March and April we started this mini bear market, and we had something very similar here on 2023, 1 year ago, 1 year and a half ago, and the 50 days moving average was positioned very similar to what we see now. So we had this high here on the 50 days moving average, and then higher high here, and then a dead cross, and then finally a golden cross. And very likely will happen something similar. So we have our first high on the 50 days moving average, and then our second high on the 50 days moving average, and then we had the dead cross here. And what is expected now is that the bottom was coincident with the dead cross. Okay, so here when we had the dead cross, I don't know if you can see exactly when we had the dead cross, on the following week we reached the bottom, and from then on the price started to climb. And then it rejected one time the 200 days moving average, and then used the 50 days moving average as support, and then another test to the 50 days moving up to the 200 days moving average, and then was oscillating inside the two boundaries depicted by the 200 days moving average and the 50 days moving average, until it broke above the 200 days moving average and the bull market resumed. So exactly the same can be expected now. So the bottom was reached here during the dead cross, and then what did happen? Okay, let me delete these spots here. So what did happen? It took two weeks to get back inside the range between the 50 days and the 20 days, but we are still outside. So this is a more bearish situation. Okay, we have to get back inside this range here. Let me show you. Okay, we have to get back inside of this range here. It's very important to get back inside. Okay, we must get back inside of this range between the 200 days and the 50 days. So until I see we coming back inside this brown box here, I will not be positive, but I think that this will happen very soon. I think that we can have a strong rebound anytime now. So if you ask me what do I expect to happen within the next weeks, I expect this to happen, to go back inside of this box. And then as we break this trend here, this upper boundary, which might be coincident with the 200 days moving average. Once we break above this, we will be back into bullish territory. Okay, something like that could happen soon. So could be by the end of October. By the end of October, we could, in fact, resume our bullish trend up to the all-time high. Maybe by the end of 2024, beginning of 2025, something like that. But it's mandatory that we recapture the 50 days moving average here. So we have to get back into this range as soon as possible. Now, another approach is with the 21 weeks simple moving average and the 50 weeks simple moving average. So again, coming back to this scenario here, it's very important that we close 1 week above the 21 weeks simple moving average to resume the bull market, and this line is something somehow here. So nothing good can be expected until we recapture this 21 weeks moving average, which is above the 50 days moving average, which is around $60,000. So I have to see a daily close and a weekly close above $60,000 per Bitcoin for me to become bullish again. And as I said before, I think that this can happen very soon. Now, according to the Fibonacci retracement levels, we can see the worst case scenarios for the bottom, and so let me get it and give you examples of how it looked in the past. For example, in here, from bottom to top on 2023, I guess, yes, 2023. So from November of 2022 up to June 2023. Oh, sorry, I did it upside down. So let me get this right. So from the top of 2023 down to the bottom around 2022. Okay, so we can, the bottom was at the 0.618 Fibonacci retracement, which is this line here. So this was the bottom. Okay, is here. 0.618 was the bottom on the retracement of the mini bear market that started on April 2023 and it ended on September 2023. So if we do the same here from, let's say, from these higher low here, up to the top, and oh, I'm not doing this correct. Sorry guys. So I must use these bottom as the new bottom. So must be something else. Okay. So these bottom here and these top here, and the 0.618 Fibonacci retracement is exactly where we are now. Exactly where we are now. So this could be the bottom, and we simply don't see it. Okay, we could be sitting on the bottom right now and be just too blind to see through it. You can see the bottom on this mini bear market on 2023 that took place between April and September was at the 0.618 Fibonacci retracement level, which is this Casper color retracement, here, and we are sitting exactly over it. Okay, so this could be the bottom on the daily close. On the weekly close, actually, the weekly close, because on the daily close we came a bit lower on the 0.5 Fibonacci retracement. But anyway, I think there is a very, very high chance of being seated at the bottom right now. Another thing that might be on the table is another test here at the 50 weeks simple moving average. We could come down there in another week or two at around 55,000. But as we have already touched it, it's not absolutely necessary, but it could happen. So that's it, guys. I think very likely we can have a situation where a rebound could start to happen. I'll go back to the moving averages, the 50 days and the 20 days moving averages. Maybe like these here. Even the corridors. Position this here, there. So yeah, the 200 days here, 50 days here. Like this, or more interesting, we could have, let me do something. We could have perfect. We have something like that, something like that, something like this here. And for example, maybe this, create something like this. Something like that. These reds. And then we could have a candle like this. test the 50 days but being rejected. Then we could have another week to create here a lower low, a higher low actually. And then if we would attempt to break it using here the 50 days, the 20 days moving average as resistance now, and then one last test of support right here, and finally something like that, testing the whole time high here would be on October the 24th, and then just a small correction. Let me get now the 200 days, the 21 weeks and the 50 weeks. No, they are not useful in this case. So just like that. And then let me get the Harrow, something like this, until January, something like that, 91st of January. Then we could have, I don't know, we have a test at the 50, oh gosh, well, we have a test, the 50 days moving average somewhere around here, March, something like that. So let's see, mid-December, 86,000, something like this, 86k on mid-December. And we could come down to 70s. So we could have a small correction here. To test the 50 days moving average. Oh, we expect the 200 to follow suit. And then until the end of 2025 we could reach 254 just on Christmas 2025, and that's it. And this is my new projection of what could be expected. So that's it, guys. This is it. I hope you enjoyed, and don't forget to buckle up. Thank you for watching, and don't forget to like and subscribe to Top Cat Crypto Show YouTube channel. Thank you.